Hello everyone, welcome to the stock market swing trading outlook for the week of February 21st. Just a reminder, it is a holiday in the US and Canada on February 20th, so the stock markets are closed. Each week I go through the same process, looking at the overall health of the market, and that's part of my overall trading process. First I look at overall market conditions. That tells me whether I'm going to be buying individual stocks. And within those individual stocks, I'm looking for patterns and specific things that get me into those trades. There's articles on all those things. And heading into the week of February 21st, market conditions are still good. I'm willing to take long trades if we can get any setups. Recent trades have been working out well. Last week, nothing that I really liked. It worked out okay because the market was dropping and trades weren't triggering anyway. We'll talk a little bit about that. You can always check out the recent watch lists. They're updated each Monday or Tuesday, or this one's updated a couple times a month, and it's just high momentum stocks. That's the best swing trading stocks. The most recent swing trading watch list is looking for very specific patterns, cup and handles, rounded bottoms, and contraction patterns. So looking at the overall health of the indices, I look at a few different ones because they each look at a bit different segment of the market. And then I'll usually just throw on a few other charts for interest's sake. So these are the ones that we're interested here, as well as the Canadian. And we can see we're in a short-term uptrend for all of 2023, moving up very well on these indices. And some of these have been in a little bit longer term uptrend since late last year. And so that's, really good. That's about all we can ask for. Yes, there are higher highs above where we are now, but every trend has to start somewhere. And in the short term, we're building higher highs, higher lows. And that tells me right now is an okay time to be buying. I'd also thrown on this GDX versus gold. I had talked about this last week. Gold had been ripping, nice strong uptrend for months, and I just wasn't seeing a lot of gold stocks on my scan list, and I was kind of wondering why. And you can see that in 2023 here, it starts out pretty strong, but then, levels off while gold was continuing to go up. So this just said that the gold stocks were not really participating in this rally. And you can see even from late last year, they couldn't really claw much above these prior highs, whereas gold was. This is a ratio, and it just says that gold stocks were not performing as well as gold. So that kind of gave me my answer why I wasn't seeing them on the scan list. Most of them weren't just doing as well as you would have thought based on how gold was moving. Ratios can always be set up in TradingView by just punching in a stock symbol, any stock symbol, / another one, / another stock symbol. So that is the gold stocks ETF versus the gold ETF. Oil just on there, something to watch, and pretty flat throughout the last year and through last year. We're just ranging sideways in an overall downtrend at the moment. So, that's basically my comments here. We are in a little bit of a minor correction here. I'm not too worried about it. If the market health indicators, which we're going to talk about next, start to deteriorate, then that would be more of a concern. But right now, we're still, hanging out near these highs. We haven't really fallen much off of them, so no reason to get concerned yet. That's what I like about these indicators and how I trade too. It's like sometimes you might change your perspective every couple weeks, but for the most part, when conditions are good, we're just waiting for stocks to buy, and conditions can stay good for quite a while. Let's go through the market health indicators. This is the S&P 500 index, and these aren't necessarily related to the index. They are related to basically overall market health. So this top one is how many stocks are above their 50-day moving average. Just a very crude measure of how many stocks are in uptrends. Much easier to make money when you're buying, and most stocks are in uptrends compared to most stocks are in downtrends. So if more than 50% of stocks are above their 50-day moving average, it's generally a decent time to be buying. And you can kind of see this from when the price is moving up. When this is above this red line, which is 50, we're generally moving up. When we're below, we're generally moving down. Same thing here, generally moving up. Generally, we're above the 50, generally moving up. Easier to make money if you're buying stocks. So right now you can see we are about 69% of all US stocks are above their 50-day, 63% of S&P 500 stocks are above their 50-day. So that's good. Volume, not really important at the moment to me. This is daily average movement of the S&P in percentage terms. Bull markets, uptrends are typically low movement. You have small upside moves, small downside moves each day, whereas sell-offs, bear markets are permeated by these big moves, just more volatility each day. So you get periods like this, and you're going to see when you have lots of volatility, it's usually associated with a decline. When you have very low movement, it's usually more indicative of an uptrend. So we can see we're starting to level off. I've drawn these bands in here, and we're staying within those. We're starting to see contracting volatility. If you looked over here, we're peaking above these levels often. We're getting these 2% upside, 3% downside, 4% downside, 3% upside. And it's very crazy and whipsawy. And a lot of investors don't really want to get involved in that. So once we start to see that volatility drop off, more investors start entering the market. We start to see more just kind of smooth upside days, a smoother uptrend, and we're gravitating toward that now. That can, of course, change at any time. But at least right now, we're starting to show signs of lower volatility, which is more indicative of an uptrend. This is the NYSE Advanced Decline line. It is up, stocks moving up versus stocks moving down, and it is a cumulative daily, cumulative index. And you can see we've been trending up very nicely. We've leveled off a bit here as all of the indices have leveled off the last couple weeks. So that's just basically confirming what we're seeing on the chart. But overall, we're in this nice uptrend, and that confirms this uptrend as well. This is upside volume versus total volume. Nothing there of interest at the moment. Last thing we're going to look at, one thing. The ultimate indicator here is how many quality setups we're seeing and how trades are working. So I noted in my watch list last week that it was a little weak, kind of scraping the bottom of the barrel. It felt like not a lot setting up, but trades that have been taken over the last few weeks are still working pretty well. So I felt that, I think things are still working. The market health indicators are good. And when I have been deploying capital, it's been working. As I discussed anyway, we had that little drop over the last, or not so much a drop, but we've kind of been moving sideways in the stock indices. And when most stocks aren't moving up, that means we don't get triggered into trades anyway, because I'm always waiting for a consolidation or the price to move above a recent little swing high or something. So the price has to be moving up. So when the indices drop and most stocks drop, we don't get triggered into trades anyway, at least a lot less often. So it's kind of a safety mechanism built in. And so last week wasn't really looking to get into too much. This week, if I see setups, conditions are still good. Recent trades have been working, so I'm willing to deploy capital. Sectors on the move, it hasn't changed too much. The only thing I notice is that I put industrials back in here. They were strong this week. They've held up well over the last month, and they're still hanging out in the top half on the 3 months. So basically all these ones pretty much that are the tops over the last 3 months have also been pretty strong over the last month and over the last week. So those are the a lot of sectors out there performing well. That's also a good sign. When you only have one sector performing well, that's kind of a scary sign. But when you have lots of sectors that are doing well, it means broad interest in buying stocks, and again, a good indication for market health. So those are doing well. Again, this doesn't really matter too much. I just run my scan and I'm looking for quality stocks. But if you were pressed for time and you had to narrow down your scan list, you could look for stocks that are only in these really strong sectors. It might save you having to go through, some extra stocks that aren't in these sectors. So what will I be doing this week? Well, I won't be trading on Monday because it's a holiday, but after that I will be looking to add some positions. I'll be creating a new watch list, and if I do see trades, then I'm willing to take them. And of course, I'm always day trading the Euro USD and stocks. You can see how I do it in these courses here. So have a great long weekend. That is your stock market outlook for the week of February 21st. Happy trading.